Next up, we have a presentation on the new opportunities for business collaboration. Presenting this is Wole Odeleye, Technology Lead Financial Services Industry.
Thank you, and thanks, Michael. I hope I am audible enough. All right, thank you. Please let me know when you are able to see my screen.
But we can see it now.
All right, thank you. Thanks again, everyone, and thanks to the team for inviting us to this session. Again, my name is Wole Odeleye. I am the Client Technology Lead for Financial Services for the African region at Microsoft, and I'm basically responsible for driving digital transformation across the banking, capital markets, insurance, pensions, and the regulatory bodies within the African continent. This is an extremely interesting topic, and listening to the speakers, especially around topics from the perspective of financial inclusion, perspectives around open banking guidelines, perspective around ensuring consumer security in the usage of financial services, especially around fintechs. It's important that we set perspectives around the opportunities these new technologies present, as well as how we build the required guardrails around these particular technologies. So very quickly, and I'm just going to move through this at a very high level, hoping that I'm able to address the topic extensively. We need to start, and before we delve into specifics around banking as a service, we need to understand the overall outcomes expected from a customer experience point of view. From a customer experience perspective, especially within banking, there are two sets of challenges that generally affect banking institutions, especially in the African continent. First of all, is the rapid amount of market change going on that is putting pressure on banking organizations to rapidly innovate their business models. And that is because these institutions have had to become more sophisticated and adopt new innovative technologies in the view to compete favorably with startups and non-traditional players within the fintech ecosystem that is rapidly exploding. There is also the need to deal with the cost of regulatory compliance. And because the cost of regulatory compliance keeps growing as the risk of non-compliance keeps growing, it's important we build the controls associated with enforcing compliance. Morgan Stanley released some recent numbers, I think a few years ago, where they had stated that about $280 billion had been paid in fines by banking institutions across the world. Then there's also the perspective of agility, and agility is key because agility is the fundamental driver for transforming financial institutions, and it has a fundamental dependency on cloud technology for survival. Part of the successes fintech startups, venture funds, and other niche players have gained within the financial services, the reason those successes have been recorded is largely because of the proliferation of commodity technologies provided by the cloud. And what that does is that the cloud provides critical opportunities for cost reduction and compliance. And what that does is that people who are non-traditional players within the institution, within the market, are able to innovate faster than the traditional banking institutions who have a bit more rigid approaches to how they transform or even adopt technology. And to achieve this kind of agility and to even fund innovation, at the same time reducing costs, it is important that organizations find ways to reduce their maintenance operations and how they spend their capital expenditure on technologies. And we know for a fact that about 70% of IT spend in financial institutions generally goes into just maintaining systems as against building innovation. Now, what this means is that each one of these use cases supports business capabilities that are needed to be able to deliver a comprehensive solution that is fit for market. And what that will do is that it will drive a number of key performance indicators across growth projections as well as cost savings projections from a banking and financial services point of view. Most importantly, our consumers, our customers, both corporates and retail, SMEs and niche customers, are all expecting more and more personalized banking experiences. And the importance of that customer experience becomes magnified when you put it in the context of the customer journey and how a customer interacts with the banking institutions at different times of their life points. Now, where we are seeing customers beginning to innovate and complete their digitization as an organization and consulting within the African region is in three key areas. Now, you would find that most organizations tend to pay more of their attention in building capabilities from the technology modernization point of view, where they try to make sure that their architectures adopt microservices standards. They are able to build data-driven decision-making into their operations. They operate cloud native. They leverage API platforms, especially from the point of view of enabling open banking and then being able to create experimentation platforms and sandboxes to rapidly test out new solutions and innovate. But that is not the only area where capability is required. There is also capability needed from the point of view of the engagement with end customers in terms of how do they transform and create seamless omnichannel experiences beyond just the traditional channels we are familiar with in terms of USSD, mobile banking, internet banking, to non-traditional channels such as your Twitter DMs, your Signal platforms, your WhatsApp forms, and even your Instagram messaging into the overall experience a customer has when they interact with a customer with an organization from any touch point. And the ability to have third parties seamlessly integrate services into the core proposition of what a banking institution provides, and then leveraging virtual assistants and digital assistants into the omnichannel experience, providing first level assistance to customers. And then there is the digitization required for the internal employees. And this is an area that organizations tend to overlook a lot. And that is because it doesn't matter how sophisticated your systems are in terms of what you build for your end customers. If you don't empower employees internally to drive teamwork, to drive cross-functional collaboration, it will be a matter of time before your consumers begin to see cracks in the ranks in terms of customer experience. And this cuts across how you're able to help them drive intelligent process automation and simplification of tasks, how you're able to provide relationship managers, sales managers with comprehensive customer insights so that they're able to provide holistic service to customers, how from a delivery point of view, you're able to build a comprehensive customer view, what you call a customer 360-degree view, across all channels and services a customer might be engaging with your organizations with, and then ensuring that cognitive services, leveraging machine learning and AI, are embedded into your process automation tools to then ensure that the required recommendation engine, optimizations required in the customer experience, in the organizational delivery model, is driven at the most optimal manner. So, taking that into the overall ecosystem, and there are usually a lot of misconceptions around what open banking is, what banking as a service is, and what platform banking is, and I would try to quickly distinguish between these three now. Banking as a service, at the most basic concept, is an idea whereby banking services can be modularized in order to deliver what you call customized fintech services and fintech use cases in digital context. So what that does is that it enables the traditional non-banking entities such as challenger banks, technology providers, merchant services, even marketplace services, to be able to provide banking services via API connectivity. So it's basically a B2B service that then allows the banking institutions to lease out their infrastructure. So banking as a service clients typically are holding organizations, retailers, fintech startups, or any other organization that might necessarily need to carry out financial operations or don't want to have to build their own banking infrastructure from scratch. So it's similar to the cloud resources model of renting out cloud resources to a third-party provider, basically. Open banking is quite similar to banking as a service because it also, by its core model, leases banking services to non-banking organizations. However, the two models are quite different because while banking as a service as its core allows firms and organizations that are third parties to offer pure banking products via an interface, open banking grants access to client data. And when I was listening to the panelists talking, I caught on the speaker who was mentioning about the data confidentiality and how this has been extensively violated in the African region, especially by microfinance institutions who quickly just tap into customer databases and then offer unregulated financial services on structured loan services in an unregulated fashion. And that is because open banking services have been abused in the wrong fashion. Basically, what happens from an open banking point of view is that a banking institution allows an external body to access client data in a controlled fashion without necessarily transferring the banking function. So it's basically an open innovation model that comes along with the growth of technology and the changing attitudes to consumer and user data. Platform banking is the exact opposite of banking as a service and open banking, because unlike the other previous two models I have described, platform banking does not require that a banking institution shares its infrastructure, but instead what it does is that they integrate their infrastructure with other services provided by niche organizations within their own app. Some of you may have heard of some organizations who try to build what you call a super app that provides both banking services, lifestyle services like your travel, your shopping, your restaurant visitation, all within an application context that is provided by a bank primarily. And what this does is that it helps banking institutions compete more aggressively with agile organizations, because the traditional banking model is already outdated. And so what it now allows banking institutions to do is to now integrate fintech services in terms of innovation into what they already provide to their own existing customer base. Now, that said, we need to quickly jump into how you achieve banking as a service and what the key components of banking as a service are. And I will try to simplify this view as much as I can. Now, at the core of banking as a service, you have what you call a financial service data foundation and a technology core. This can be any platform such as a core banking infrastructure, a digital banking experience platform, where the core orchestration services originate from. What is required from a banking point of view is that this service and this platform be microservice enabled, so that they can decouple their services in such a way that these services can be exposed and the user experience can be exposed through API orchestration platforms. The second area of this is the marketplace. You cannot have banking as a service without a marketplace offering and a marketplace proposition. A marketplace that connects fintechs, connects merchants and traders, connects ecosystem players in such a way that their products can be sold and transacted amongst each other in such a way that the banking provider, the provider of the core digital foundation, is able to now position secondary financial options. An example is this. Imagine an organization, a banking organization decides to create an SME marketplace that allows traders who transact in consumer FMCG goods. Allows them to transact and sell products amongst themselves in an e-commerce virtual store point of view. And from a financial core point of view, that banking institution leveraging that foundation is then able to provide SME trade finance options, supply chain financing or some credit facilities to these SME traders. And leveraging the data, they're able to quickly do transaction segmentation by being able to identify which traders transact the highest volumes of business and who they can then support with secondary financial options, right? The third area is the ecosystem. The ecosystem is really where technologies comes into play from the fintech point of view, which is where specialist and niche technology services can then be positioned within the overall banking experience in terms of partnerships, in terms of licenses to use these technologies. And all this can then be bundled in application context that an end consumer can utilize. And the ecosystem management is bi-directional. It can be a bank leasing existing services from existing players, which can be insurance players, public sector players, utility players, or fintechs and startups. It can also be the reverse, where they also expose their services through APIs in the traditional open banking model for these organizations to reuse their own infrastructure in their own application context. Then you now have the user experience services driven by mobility, web, bot technology, voice, and APIs, which now allow an organization that wants to provide banking as a service to do this in a much more user-friendly manner and in a way where consumers can have assisted services without necessarily having to speak to a physical agent or a physical manager or a physical salesperson in the course of their user experience journey. Then you need to think about back office services in terms of robo-advisory and digital process automation required for the process of simplification of transaction reconciliation, cross-border payments validation, identity validation, document management, and automated document conversion into digitalization. All this to ensure that there is a seamless connectivity between what is going on in the financial core, the user experience front, and the back office systems. Then you now need to think about the comprehensive data foundation in two parts. First of all, being able to provide banking as a service, or rather what you call data as a service, in such a way that an organization can then monetize their data through APIs being consumed by the ecosystem or by the marketplace. Also, being able to ensure that across all these initial 6 services I have described, to ensure that the primary orchestrating organization has comprehensive insights to be able to identify growth, revenue opportunity, cost savings opportunity, and also provide machine learning use cases and models around product recommendation, customer insights, risk analytics, security breaches, and opportunity for positioning secondary financial services and solutions. When you take that model and you now try to transition it into, or rather decompose it into its component space, this is how it would then look like. You will have at the front a number of what you call participating organizations. The participating organizations will be made up of any possible group of people who may be utility services from public sector, or services who provide things from your passport office, your identity commission, your pension commission, any sort of utility, or even water and power. You have retailers and merchants who transact in consumer experience services and consumer experience goods that consumers from an SME point of view tend to engage in their day-to-day lifestyles. You have banking subscriptions in terms of the actual core banking services, in terms of investment services, mortgage services, loan services, credit financing, virtual account management, and payment services that consumers, both retail and corporate, would require. And then you would also now have your ecosystem players who are now providing niche services on a discretionary basis. All this would then be positioned within what you call the banking platform services. The banking platform services will be operating in what you call a modular decomposed architecture, which we like to call microservices based, whereby you are now as an organization then able to position this from a technology platform, a central technology platform consumed by other players who are trying to plug into your own ecosystem. This platform needs to be powered by a very rich application and services marketplace that gives you the opportunity to pick and choose what type of services you want to make available to this partner ecosystem or your consumer banking services. And this marketplace needs to sit on a very robust and matured cloud platform that provides a full stack set of services that allows you to quickly spin up services, spin up capabilities without you having to own or build the complex underlying infrastructure. All this has to be governed by a very strong data model and industry standards. Industry standards such as the open banking guidelines that have been released by a number of countries in the sub-Saharan African region, the data protection standards, the cloud governance standards, as well as cybersecurity standards and compliance standards across anti-money laundering, across counter-financing of terrorism, comprehensively to ensure that this entire ecosystem that is being shown is being able to be delivered to end consumers in the most secured possible manner. And so when you think about it in terms of the approach, typically it starts from the core, which is where banking institutions and core organizations have their strength in terms of the core services they provide, from lending, savings, insurance, investments, credit, payments, and then you now layer the banking platform services across what we are already doing from an open banking point of view, savings as a service. And when you look at fintechs like PiggyVest, Cowryvest, what they have done is to layer niche services on top of open banking standards of existing players, providing a strong identity as a service framework, because identity is literally the biggest problem we face as a continent in terms of the growth of our ecosystem. Agency banking and leveraging the agency banking network, especially for the purposes of financial inclusion for the unbanked and rural areas, payment services, and then credit and identity services. And that is how we now progressively build a robust ecosystem of services from what we know and what we know to be our strength to the new areas that are going to actually deliver really practical day-to-day use cases to consumers who need this banking and financial services in their day-to-day life across the customer journey, from when I'm a student to when I get my first job, to when I buy my first car, to when I'm getting married, to when I buy my first house, to when I'm planning for retirement, and to my pension planning, and to ensure that my entire journey, both as a business owner and as a person, is comprehensively covered within the financial services space. Because of time, I'm just going to quickly jump into how certain organizations have already achieved this. So from a Microsoft point of view, Microsoft as an organization, we have partnered with organizations across the world in building this neobank, banking as a service model on top of their traditional banking or their traditional financial service propositions. Some of our really, really creative examples are Clearbank in the United Kingdom and Volt in Australia. Clearbank is one of the first core settlement and payment banks in the United Kingdom, born completely digitally in the cloud, being able to provide end-to-end payments and white label banking services. The white label banking services are then being leased by secondary financial services providers who are then able to reuse those foundation services within their own proposition. So what then happens is that these consumers of these services are essentially just paying Clearbank for the use of their infrastructure. And then you have Volt, who are built off the back of a very traditional bank. And what they have done is to now also build this banking as a service where a set of approved business partners across the fintech space are able to now provide full banking and payment services to their own clients, leveraging the Australian Neobank data foundation. In terms of bringing this to life, there are certain ways you can quickly, as an organization, build out this capability, working with organizations like Microsoft, or even, the larger technology advisory players like EY, Deloitte, who already have robust technology partnerships with us. And it starts by being able to make sure that you understand exactly what the market opportunity and the principles are. You should never embark on a journey like this without understanding what your end goals are. Neither should you try to be everything to everyone. Spreading yourself thin is an opportunity for failure. By identifying the niche areas you want to play in from banking as a service point of view, the next thing to do is to actually now build the market differentiators and the customer journeys on those niche journeys. And that is what then forms the actual technology envisioning cycle you go through, where you define the kind of capabilities and where those capabilities will come from, how you scale out those capabilities, build your solution blueprint and your roadmap, and then actually deliver the platform. This has to be done in conjunction between the core technology functions and the business functions. The business functions who are going to own the execution and the delivery to the SME, the corporates, and the ecosystem partners. Within certain banking institutions in sub-Saharan Africa, what banks are doing is that they are just acquiring entire fintechs to be able to build this practice. Some are just building banking as a service and digital banking practices as a standalone organization from the core banking function to give this digital banking and banking as a service operation the kind of operational agility and flexibility from a regulatory point of view. I'm going to stop there, and I'm happy to take questions from the audience and also the facilitators at this point. And I hope I have been able to address this topic comprehensively. Thank you so much. Hello.